Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Money 2020 in Las Vegas, Nevada. Joining me for this segment, we have Jane Barratt, Chief Advocacy Officer of MX Technologies, to discuss regulation and the impact for data aggregators and financial institutions. Jane, it's great to have you with us. Welcome to TradeTalks.
Thanks for having me, Jill.
Why do consumer financial data rights matter so much right now?
So I think consumer financial data rights have always mattered. It just hasn't been very easily accessible. Like the way that people access their money, the way that they share their data, the tools that they use are absolutely critical for sort of long-term financial health. And bringing regulations to the fore right now really helps kind of make it much more standard and much more, it's much more positive for the end consumer in terms of wherever they choose to bank or borrow or invest or pay, they should have security. They should have privacy rights. And so when we talk about data access rights, fundamental to that is just the, that right to be able to share and access and, really make your own financial life healthy.
And when you talk about standardization, you're talking in terms of global standardization?
It's not global standards. Every country is slightly different in the way that they've come to market. The US has, at the moment, been very industry-led, whereas other markets, Australia, for example, I always sound a little parochial as an Australian, but other markets have been more regulatory-led, so everyone has to come together from a compliance perspective. This is what the data we're going to make available in this form when requested. The US has actually created a standard already through the Financial Data Exchange, with which most of the large institutions have already adopted. They have FDX standard APIs, and so if you bank with many of the larger banks, you can actually access and share your data through these secure APIs. What we're looking at now is bringing the rest of the industry along.
So what does the next evolution to open finance APIs look like then?
So we're starting with open banking, right? So that's the retail data, your checking, your savings, your credit cards, some of your digital wallets. Open finance, what we hope to get to sooner, but right now we're speaking more open banking. Open finance is things like payroll data, investment data, tax, right? And then the real vision is, can we bring someone's 360 degrees financial life to the forefront? Can you actually see all the dimensions of your financial life? Right now, you can see the retail side of things. It's harder to get investment. It's almost impossible to get payroll. Although there's some great innovators in the space now, like Atomic.
So what's going to be covered in this initial rulemaking? I mean, as a consumer myself, what am I exactly accessing?
So you may not actually see any difference except for maybe in terms of speed, right? So if you've been running a budgeting app for the last 10 plus years, you probably have 10 years of data in this budgeting app, which is awesome, right? To access that app right now and to connect your different accounts, you had to share your credentials, your username and password. That's the big difference. We're going from username and password, credential sharing, and then screen scraped. So, in the past, you would, give access to this budgeting app to see everything you see once you hand over your credentials. Moving forward through an API, imagine it's more credential free. Your bank is saying, yes, this is Jill, and here's the data that you need for this budgeting app. You don't need to see all of this other data. You just need to see what is relevant for the budgeting app. So if you think about it in terms of data minimization, right? You don't want your whole financial life out there just for this budgeting app. You don't want your credentials out there just for this budgeting app. So you may not see a huge difference, but the performance will be faster, more secure, more private, and now more standard, right? So if you're banking with someone that has these APIs available, everything is like lightning fast, high-speed Wi-Fi, right? If you're banking with someone who doesn't have that, it's kind of like dial-up internet, right? It's slower, it's less secure, you may or may not get what you need.
Which is so awesome as a consumer. I feel like we're sharing so many credentials and we have to put our credit cards in this app and addresses in this app. And that I feel like it just adds another layer of, from a security perspective of something getting hacked or the nightmare stories that are out there. So as a consumer, this is awesome.
It's great.
You don't have to keep putting in the same username and passwords with all these different apps.
Yeah, and I think it is unprecedented collaboration across the industry. Everyone is working in the spirit of what's the right thing for the consumer, right? There is no heavy hand saying, oh, everything has to be this way. It is this very collaborative effort to say, let's take credentials out of the ecosystem. Let's make things faster, more secure, more private, and build for this next generation of innovation. That's what we're all excited about.
All right, Jane, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me for Money 2020. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.